The ultimate guide to Forex trading, tips, strategies, and best practices. Forex trading, also known as foreign exchange or currency trading, is one of the most popular and lucrative financial markets in the world. With over $6 trillion traded daily, it offers an excellent opportunity for investors to make a profit. However, Forex trading can be complex and challenging, especially for beginners. In this article, we'll provide an overview of Forex trading, including its benefits and risks, the best strategies to use, and tips to help you succeed. What is Forex trading? Forex trading involves buying and selling currencies with the aim of making a profit. Unlike other financial markets, Forex is decentralized, meaning there is no central exchange. Instead, transactions are conducted electronically over the counter, OTC, via computer networks between traders around the world. Benefits of Forex trading. One of the main benefits of Forex trading is its liquidity. The Forex market is the largest financial market in the world, with a daily turnover of over $6 trillion. This means that traders can enter and exit positions quickly and easily, with little or no slippage. Another benefit of Forex trading is its accessibility. With the rise of online trading platforms, anyone can trade Forex from anywhere in the world, 24 hours a day, 5 days a week. This makes it an ideal market for both part-time and full-time traders. Finally, Forex trading offers the potential for high returns. However, this comes with a high degree of risk, and traders must be willing to accept losses as well as gains. Risks of Forex trading. As mentioned, Forex trading involves a high degree of risk. The most significant risk is the potential for significant losses, which can occur due to market volatility, leverage, and other factors. Traders must be prepared to manage risk effectively, through strategies such as stop-loss orders and risk management techniques. Another risk of Forex trading is the prevalence of scams and fraudulent activities. Traders must be careful to choose a reputable broker and avoid any offers that seem too good to be true. Forex trading strategies. There are many different Forex trading strategies that traders can use to achieve success in the market. Some of the most popular strategies include technical analysis. This involves analyzing charts and indicators to identify trends and patterns in the market. Fundamental analysis. This involves analyzing economic and political news to predict market movements. Price action trading. This involves analyzing price movements to identify patterns and trends in the market. Swing trading. This involves holding positions for several days or weeks to take advantage of market swings. Tips for success in Forex trading. To succeed in Forex trading, traders must be disciplined, patient, and focused. They must also be willing to learn and adapt to changing market conditions. Some tips for success include: develop a trading plan and stick to it. Manage risk effectively through strategies such as stop-loss orders and risk management techniques. Keep a trading journal to track your progress and identify areas for improvement. Stay up to date with economic and political news that could impact the market. Avoid emotional trading and make decisions based on facts and analysis. Conclusion: Forex trading can be a rewarding and profitable market, but it also comes with significant risks. Traders must be prepared to manage risk effectively, use the right strategies, and stay focused on their goals. By following